Hey guys, welcome back to Stacking Stocks, and many thanks for joining us today. As usual, we have more informative and awesome content for you today. Are you super excited about today's session? Well, sit tight and stay tuned. Today, we'll talk about why NEO shares are rising and the aftermath of the NEO sell off. Is it time to buy NEO stock? Let's find out. NEO stock declined by almost 4% over the last 2 weeks and also remains down by about 17% over the last 2 months. While the sell off is driven largely by macro factors such as the Evergrande crisis in China and rising bond yields, there has actually been positive news on the business front for NEO. NEO recently posted stronger than expected delivery growth, with its EV sales standing at 24,439 units over quarter 3, 2021, ahead of the upper end of the company's guidance of 23,500 units and up almost 2 times versus last year. We've also established that the company delivered a total of 10,628 vehicles in September, a monthly record, and a year-over-year increase of 126%. What do you think about this? Don't you think the growth rates are encouraging? We believe that these growth rates are particularly encouraging as they come despite the ongoing chip shortage, which has hurt production across the auto industry. We think NEO still looks quite attractive for long-term investors, and you should consider adding it to your investment portfolio. Although NEO stock trades at a relatively high 10 times consensus 2021 revenues, it should grow into this valuation fairly quickly. Sales are projected to grow by about 120% this year and by almost 65% next year, per consensus estimates. Margins have also shown an increasing trend, with gross margins increasing from levels of around 8% in quarter 2, 2020 to around 19% in quarter 2, 2021, meaning that NEO should be quite profitable as it scales up. Now, with the stock down about 37% year to date and by over 45% from its all-time highs, this could present a nice entry point for investors. Well, what more would you want as an investor? We've got the sales shooting up, the stock share price is also going up, and the company is set to increase production units. As a matter of fact, the move to increase production units seems to be increasing investor sentiment about the stock. It's quite evident that NEO shares are trading higher following reports suggesting the company said it would be able to double annual production capacity at its Hefei facility in 2022. What can we decipher from this? It means that we should expect NEO to increase its production levels come next year. We believe that this is good news to both consumers and investors, especially the latter. And it looks like NEO wants to improve its operations so as to become more competitive in the electric vehicle making industry. Don't you think that this is a major step towards getting bigger and better? We've established that the NEO upgrade is for the start of production of new models, including the ET7. The current annual production capacity is 120,000 units per year and will reach 240,000 units per year after the overall upgrade is completed. We're talking about double the production units per year. What does it mean in terms of production numbers? Following all the expansion work and with extra operating shifts, the plant would be able to make up to 300,000 cars a year. We know that NEO designs, develops, manufactures, and sells smart electric vehicles in China. The company offers 5, 6, and 7-seater electric SUVs as well as smart electric sedans. For a long time, it's been referred to as the Tesla of China by several consumers. As a matter of fact, there are many people who believe the company has got great potential to be successful. Maybe it's because Chinese consumers tend to go for local brands a lot more as compared to other consumers. NEO is currently trading at about 3.94% higher, which is $37.71 per share. The stock has a 52-week high of $66.99 per share and a 52-week low of $25.46 a share. As you can see, the stock has got so much potential to go up to double the price. On the other hand, it can also go to a low not quite desired by investors. So what will it be? Where do you think the stock is headed? We believe that the stock has had its fair share of a downward trajectory, and the only way left to go is upwards. There was a decline instigated by the massive sell-off in Chinese stocks, and just like other Chinese stocks, NEO wasn't spared. The stock was also a casualty of the sell-off. Moreover, the crackdown by the Chinese government on tech companies seems to have scared off many investors. But the recent surge in the share prices proves that the sell-off is being reversed, and you don't want to miss out on this opportunity. 3 months of unmitigated selling pressure on Chinese stocks have left their mark on Chinese electric vehicle maker NIO. NIO shares have lost over 30% of their value since July 2021. But we all know that the dark days have passed, and great things are on the way for NIO. From how we see it, it looks like the right time to buy NIO stock. Why buy now? What's changed that can be more than enticing to consumers and investors? In addition to the broad-based market sell-off, after all, NIO suffers from some problems of its own making. In particular, an August fatal car accident involving a NIO car driving with its Navigate on Pilot or NOP autonomous driving mode on, and an early September sales update that reduced expectations for sales volume in the face of supply chain constraints. If you're a consumer or investor, how would you react to such stories? Ideally, many people would think twice before trusting NIO. But we believe that the story surrounding NIO is about to change. Like we mentioned before, we've come towards the end of the NIO dark days. Why do we say so? We should expect better days ahead. We think that the next 6 months will see strong volume expansions at NIO as the company introduces its ET7 electric sedan in China, which is expected to go on sale in Q1 next year. And that's not the only good thing happening next year. We also expect NIO to enter the Norwegian electric car market internationally. Do you know what this means? It means that we should expect a massive increase in sales. We all know that electric vehicles are the future of transportation, and the best thing right now for any electric vehicle making company is to increase its market reach to be able to compete globally. Well, better days are coming for NIO indeed. We also expect NIO to advertise new wares in China at its upcoming NIO Day 2021. Among the unveilings expected, there will be NIO's second electric sedan, the anticipated ET5, which will be comparable to a Tesla Model 3. Profits should grow nicely as well, especially thanks to the ET7, which is expected to be China's priciest car model launched by a domestic brand. Wow, things keep getting interesting for NIO. We believe that introducing a luxury electric car in the same class as peer full-size premium sedans, including Mercedes S-Class and BMW 7, is a strategic move for NIO. The ET7 will be NIO's fourth electric passenger vehicle introduced in China and its first electric sedan. Essentially, it will also go a long way towards reducing range anxiety among electric car buyers, and that's what investors expect from a top electric vehicle car maker. Vehicles that will fascinate consumers. We've established that the ET7's basic 75 kilowatt-hour battery pack will be good for 500 kilometers of range, while an extended range battery pack is good for 700 kilometers per charge, and a new semi-solid state battery could achieve as much as 1,000 kilometers between chargings. So what will stop this car from being sold out? And of course, there's NIO's secret weapon, its ability to offer battery as a service, whereby customers can buy a car and lease a battery separately, such that there's never a worry that a battery will get old and fail to live up to its promised range throughout its lifetime. If that ever happens, a customer can simply get a new battery, pop it into the car. With all these upgrades, what could possibly go wrong for NIO? We expect the company to compete in the global auto market. But we'll be sure to keep you in the loop in case of new developments. Remember to like, share, and subscribe. See you next time right here on Stacking Stocks.